everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, October 10th, 2023. So we saw the bulls run right up into the resistance area that I spoke about in the morning, and once it ran into the 50-day moving average, sellers stepped in and pushed it back down again. So we were up, I think, as much as it was almost close to like 44 points. So we gave a big piece of it away. As far as candles, this is not a bullish candle right here, which makes sense just because I'm anticipating that we're going to come down and do some backing and filling, most likely down anywhere between the 4,300 to all the way down to the 4,267. That would make perfect sense. So this candle does make sense, and really what I'm looking for is just some backing and filling. If we look at the 60-minute chart here, you can see that we kind of have a little bit of a bearish divergence forming. It's not really a great one, so I'm leaving the door open that these highs have to be taken out one more time, just, and most likely if it does, you know, say we do have an update tomorrow or on Thursday, we could use tomorrow to just do some little, you know, say sideways action, maybe down and close down just a little bit, but then have a move up. And really what that's going to do is allow our momentum indicators to start tilting over and giving us a, you know, a proper sell signal. Again, the sell signal, I'm not looking for the short. I'm waiting for just to be able to buy the dip on that, and like I said, I wouldn't be surprised to see us coming anywhere down to this to the 42.86 and possibly down to the 42.61. If we go up, then I'm expecting this gap to get closed, and I thought we were gonna close it, that we were gonna be in the trade for that. I didn't realize they were just gonna shoot this thing up, you know, almost 200 points off the lows in a matter of days. So you know, it was really just a massive short squeeze, and the rhyme and reasoning behind the bulls, I mean, I just continue to scratch my head on this one, where I'm saying, you know, they're getting all bulled up because the Fed said that they're probably not going to have to raise rates anymore for the rest of the year, but they're missing the reason why, and the reason why is because interest rates are just continuing to go up without them having to raise it. So I don't, you know, again, just another thing that doesn't make any sense to me. You know, I went to school in New Haven. It was not Yale, and I'm sure there's people that are, you know, a lot smarter than me that are just not really looking past their hand on this, because the Fed is not going to start cutting rates unless we go into a recession, unless the stock market, you know, the S&P drops 2,000 points. That's when they're going to start cutting rates. They're not going to start cutting rates up here. Inflation is still high. Oil is probably going to move even higher, especially with all the geopolitical stuff going on. We're kind of in the, you know, we're in a proxy war with, you know, so many different countries right now, and you know, the Fed knows that, so they're not going to put themselves in the same situation that they were in last time, where they kept rates at zero for almost you know, 12 years. So they trapped themselves, and they know that. And right now, you know, they're the only way that these you know, the Fed bulls are going to get their wish is if you see the S&P back down there in 2000, or we go into an all-out recession. I'm sorry, they're dead wrong on this one. I said they were dead wrong when they thought that the Fed was going to start cutting up here. I think their reason for getting bullish is dead wrong as well. Now, again, that does not mean that I want a short. I just think they're going to be wrong, and they're going to get overly bullish for a reason that doesn't make any sense at all. So anyway, if we head up, I believe sellers will be waiting at the 4,400 level. On the downside, we have support that's right around that 43.22. Below that, that's where we're looking at to 43.07. But as I said, this would kind of make more sense right here, and really the main reason is this is where the 200-day moving average is. So I think we're going to be playing some ping pong here. Get people that are just really, really bulled up, get them a little less bulled up. But, you know, a lot of bears got washed out. And as I said, the good thing is we weren't short going into this this massive squeeze. Bad thing is I just was a little too nervous to pull the gun on the long side, even though that's the way I was looking. So anyway, nothing really else to go over. We were anticipating the bounce down here. We got it. Now I'm anticipating some backing and filling. When it does, we're going to look to buy it. And with that, have a great night, and I'll talk to you guys in the morning.